What's up, YouTube? Today marks day number 34 of the $1,000 account challenge, and today we are up $160 in the account, or 6.7% of the total portfolio balance. Now, if you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options using my system and strategies to see how far we can grow this account. Today was a live trading day, so I don't have any alerts to show you as they were given out during the live trading, but I will walk you through the trades that I took regardless. SPY was a long idea above 498.5, short idea below 496.5. SPY never gets anywhere near either one of those levels, but I still took a trade on this today. Why? Well, I noticed intraday price action was rejecting this green line right here, which is the previous day's closing price. We have about 15 minutes of rejection here, a drop down, a rally up, another 10 minutes of rejection there, and then a break of this uptrend trend line that I drew. So moving to the 1 minute time frame, when I see the break of this uptrend trend line followed by another rejection of the previous day's closing price, my thought process is SPY's not going to be able to push today above the PDC. Let's look to take it short. So I do just that. We get the breakdown here. We're not chasing the move up. We get the rally up. We go short on the rally and the drop down. We are green on the trade right away. Fantastic, right? Then what happens is that SPY puts in, so this would be your low of day. I was looking for the move back down to the low of day. Instead of getting that, SPY puts in a higher low and starts to rally back up. And I'm like, you know what? I don't want to hold on to this trade in case this is a higher low, higher high situation where SPY potentially runs all the way back up towards this high of day. So let me just close it out if it does not work the moment that it reclaims the 498 point of resistance that it dropped down from earlier. And when it does that, I take about a 6% loss on this trade. It was literally $6. Not a very big loss at all. But what's unfortunate about this is that just a few minutes later, we get the rejection of that PDC once more, and then the bigger move down towards the low of day, into the new low of day. So the entry here, in real time, it seemed like the right decision. I don't think that there's anything that we could have done to make this trade any better. We didn't chase the move down. We got the rally up retest. We took the entry short. We were green right away. It just didn't work the moment that we took the trade. So this trade really was all about timing. We were just a bit too early, but that's not our fault. There was no way that we would have known that this was not going to break back above the PDC and then give us a big rejection like that. So SPY was a losing trade, about a 6% loss there. Next trade was on PLTR. This has been a runner for us recently, and it's a very similar situation to SPY where we were just a bit early. PLTR today was a long idea above 24.10. We get the move, opening consolidation, we get the move above 24.1, the pullback retest of 24.1, consolidation, and then a drop. This does not hold 24.1 as a point of support and press higher, which is what we were looking for, and instead it reverses and comes right back down. Now, at the peak of this drop, I do believe I was I was down about 20 to 25% or so. But because I was sized down on this trade, which I mentioned to everybody in the live trading, sized down because it's a volatile stock, it's a cheap stock, and we're already trading options that expire tomorrow, which is added volatility. So it's volatility on top of volatility. We're sizing down, right? Because this dropped down and we were down 20 or 25%, it's not necessarily a reason to panic sell if we're sized down and okay with the monetary amount that we're down. You see, the whole point of sizing down in a trade is to give the stock room to work, to give your P&L percentage room to work. So if I'm trading with $1,000 and I'm used to stopping out at 10%, that means I'm taking a $100 loss. But if I size down to $500, I can now afford myself a 20% loss and still only lose $100. You see how the math is mathing there? So when we get the drop down, I'm not necessarily panic selling on this drop because even though I'm down a large percentage amount, the monetary amount still isn't that much. Plus, I knew that this is our low of day. It's going to be a potential bounce spot. We do get that bounce up. I'm not sure at this point if it's going to reclaim 24.1, so I do close the position out for about a 9% loss on this. by the way, which was literally another $6. And unfortunately, it just breaks right back over and runs up higher. So how could I have corrected this trade? Well, instead of holding through the drop, what I should have done is cut it the moment that it did start to drop. So cut the trade here, just go ahead and assume that loss right away. Let the thing drop, watch it bounce and recover, and then take a re-entry back at 24.1 in the same area that we were at, and then capture this move up into the high of day. So that would have put us actually green on this trade had I did that, rather than holding through the drop, waiting for it to rebound, and then closing it up here. So unfortunate, very similar situation to SPY, where we were just a bit early on our entry. You know, had we not taken the break of 24.1 there and instead taken it over here, this would have been a green trade that worked for us. The third trade that we took was on Microsoft. So Microsoft was a long idea above $414, and this was strategically done and intentional, because I was thinking, well, the all-time highs are at 415.3, right? There's a chance Microsoft breaks 414, which is right here. Chance Microsoft breaks 414, runs up to the all-time highs, and rejects and gives you a pullback. And on that pullback, we can go long for the run up into the high of day, which is exactly what happened and exactly what I mentioned in the live trading. Now, I did not take this trade, I believe, because I was in PLTR at the time. Or I was in another trade. Yeah, I believe it was PLTR, or I was watching PLTR at that time. So I didn't take the trade, right? But then what I realized on Microsoft is that we actually get an all-time high rejection shown by this candle here. It's consolidating. I'm ready to go long on this if it bounces. I'm ready to go short on this if it fails, and it does fail. So it breaks down from this consolidation, breaking below the long trigger at 414, and I take the entry short right here. Now, initially, I'm looking for a 20% gain on this. I'm looking to be that profit target trader where I'm taking my profits at the 20% that I normally look for. We get the move down to the low of day, we're up 10%, and we don't get any move further. It actually bounces right back up, and I'm thinking, oh gosh, okay, this is about to turn into a losing trade. Let me readjust my strategy. Because we know that the low of day is always going to be a potential point of support. We just saw that with the PLTR bounce, right? We know that low of day is going to be a potential point of support. The next time that we're offered profits at the low of day, I went ahead and secured what was there, which was about 12 or 13% profits. We get the move, and I don't close the whole position because I'm still looking for the 20%. We get the move back up, we get the move back down. I think over here I'm up about 17% on this position. I'm not closing it out because I've already taken profits previously, so I'm letting this work. I'm trying to see where this is going to go. It doesn't do anything. It doesn't give us the move lower. We actually get the rally back up, and I think I closed the remainder out, I believe, for like a 5% gain on that remainder. But fortunately, this was enough to put us green on the day over the previous two trades. Literally, those losses added up to $12 plus commission. You're probably looking at like $14. And then Microsoft giving us the larger win here, which was enough to put us generously green on the day. Actually, more green than our trades from yesterday, which was only $116. Even though we took 20% twice. So it's just a matter of scaling down or sizing down on positions that you have less confidence in, and then sizing in or sizing appropriately on the setups that you have more confidence in. I hope that the video has helped. Press that like button for me if you haven't done so already, and consider subscribing to the YouTube channel if you haven't done so already. It's just the best way to support this type of work that I do. Thank you so much for your time, and I will see you tomorrow when we continue the $1,000 account challenge. Cheers.